Am I
وعليكم
audible?
السلام ورحمة الله وبركاته.
Alaikum assalam wa rahmatullah.
Am I audible?
Walaikum
We can
assalam.
we can hear you. We can hear you.
Okay, perfectly fine. Good afternoon, good morning, and good evening to everyone who are joining us from different time zones. Assalamu alaikum. Welcome to today's webinar on Malaysia's Islamic Banking Revolution Lessons for Global Markets. My name is Madiha Rubab. I'm a chartered accountant, LLB, LLM, and topmost member of Managing Committee of Al-Sadiq. I'm a banker by profession. We are delighted to have with us Mr. Faisal Hussain as we delve into the transformative journey of Malaysia in Islamic banking sector and explore the invaluable lessons it offered to global markets. Just a brief introduction of Mr. Faisal Hussain. Mr. Faisal Hussain brings with him over 2.5 decades of extensive experience in the banking sector, primarily in Pakistan. As an ex-director of research at IBP, Mr. Hussain has been instrumental in spearheading and supervising numerous projects aimed at enhancing the capabilities and standards of banking sector in Pakistan. Before starting the presentation, I request everybody to please type your questions. During the Q&A sessions, I will ask the questions sequentially. Now, without further ado, I'll hand over the virtual mic to Mr. Faisal Hussain. Mr. Faisal Hussain, thank you. Please start.
Thank you, Ms. Madiha, for inviting me for this session. I'm greatly humbled and obliged of Al-Sadiq Institute of Islamic Banking and Banking, Finance and Takaful for inviting me and giving me the honor to speak on behalf of them to their audience. Just to briefly describe, Al-Sadiq Institute of Islamic Banking and Banking, Finance and Takaful is an educational research and development institute of Islamic finance system in Pakistan. And they have been working for over 2 decades now, and they are providing services to the banking industry in Pakistan. Now let's move on to the topic of today, Islamic finance in Malaysia. So Malaysia stands out as a global leader in Islamic banking, showcasing a sophisticated and comprehensive Islamic financial system. This landscape offers a blend of traditional Islamic principles with modern financial practices, aiming to cater to the diverse needs of both local and international markets. The sector has various players, which includes full-fledged Islamic banks, Islamic windows, and takaful operators within them. The roots of Islamic banking in Malaysia can be traced back to 1960, when an institution which was developed for the Muslims to save for their Hajj pilgrimage was established. And then further in 1983, the first move towards development of Islamic finance system was initiated through the Islamic Banking Act 1983 and the Government Investment Act 1983. Following these acts, the first Islamic bank, Bank Islam Malaysia, was developed. This marked a dual banking system within Malaysia, allowing conventional Islamic banking to operate in parallel. Islamic financial institutions required to separate the funds and activities of Islamic banking transactions from that of conventional banking. Therefore, in January 1994, Islamic interbank money market was introduced. And further going down the road, Islamic subsidiaries were also introduced in the Malaysian market. The regulatory framework as of today stands as Islamic Financial Act 2013. Bank Negara, which is the central bank, plays an important role in the development of Islamic finance and Sharia compliance within Malaysia. And they have a Sharia governance framework, which was introduced in 2010. This framework outlines the responsibilities of Sharia committee management, the board of directors, ensuring all financial activities are in compliance with the Sharia principles. Recently, they have also developed a digital banking framework, although this does not fall directly under the Islamic banking spectrum, but Islamic banks are also facilitating themselves through this act, developing digital Islamic banks. If we look at the brief picture, this is the role of Bank Negara. The supervisory objectives are financial sustainability and consumer protection. Then they have various players, which includes takaful operators, money markets, capital markets, banks, and therefore thereafter. They have separate clearing and settlement systems for the Islamic banking and separate for conventional banking. If you look at the overview of the banking system in Malaysia, so there are 26 conventional banks, 18 of them are foreign banks, 8 are domestic banks. If we talk about full-fledged Islamic banks, there are 10 full-fledged Islamic banks which are domestic, and 6 are foreign Islamic banks. If you speak about digital banks, there is 1 digital bank and 2 conventional banks, 2 conventional digital banks. And the most important thing about the training and academic institutions, so there are over 8 training and research institutes and 1 university which work along with the financial system in Malaysia. As far as conventional banks are concerned, they also have their Islamic banking windows available. This is an overview of the current financial status within Malaysia. If we go through the figures, these are official figures of 2020 till 2023. Malaysia Islamic finance market share of overall banking system has reached to 45.6% in 2023. And they are on their way to achieve a target of 50% with respect to conventional banking by 2030. So as far as things are moving, the annual growth experienced by the Islamic financial institutions is 7.7%, and similarly, the conventional banks are growing at 3.4%. If we talk about annual growth and in terms of capital ratio, it's growing at 6%. Takaful market share holds about 18% of total insurance market in Malaysia. Takaful contributions have reached approximately around 12 billion ringgits. Family takaful, which is similar to life insurance, represents 65% of total takaful contributions in Malaysia. So this is a brief overview, a brief picture of what Malaysian markets are experiencing. As far as capital markets are concerned, the market size of Islamic capital market represents approximately 60% of the total capital markets in Malaysia. There are over 75% securities listed in the Securities and Commission Exchange of Malaysia, which are Sharia compliant. So let's move on and see what was the key factors for the revolution in Islamic banking in Malaysia. Malaysia's Islamic banking revolution is characterized by a strong regulatory framework, government support, market growth, productive innovation, and international leadership. These elements have positioned Malaysia as a global hub for Islamic finance, driving economic growth and promoting financial inclusivity. The key drivers for Malaysia's Islamic banking revolution falls under these 6 categories. Now let's drill down into each of these categories and see how did Malaysia obtain a leadership role in Islamic banking through its initiatives. Firstly and foremost, being innovative and taking up challenges. Islamic fintech solutions have been introduced over the years with products like digital wallets, mobile payments, and peer-to-peer lending platforms that comply with Sharia principles and are transforming the financial real landscape. Green and social responsible sukuk has also played a major role for the funding of the government. With the introduction of digital banking services, Islamic banks have also adopted digital banking services and have used for their growth and increasing their productivity. The new concept of Islamic microfinance, Islamic takaful, which help for the low-income individuals and small businesses to manage risk and build financial security. And one of the major initiatives was Islamic Real Estate Investment Trust. The investment trust pools funds to invest in Sharia-compliant real estate and generate rental income for investors. So these were a few initiatives which stand out. But besides these, Malaysia has always been a hub of innovation within Islamic banking domain, and they have provided the services throughout the globe in terms of research and productive facilities. Next, the factor which has played a role is technology and fintech integration. With the new generation coming up, fintech has played a major role, and all conventional outlets have been converted into online platforms. Similarly, the Malaysian market has also adopted these technology and fintech integrations through blockchain and smart contracts, artificial and machine learning within their systems, digital payment solutions, and crowdfunding and peer-to-peer lending. So these principles comply with the Sharia standards, and they provide services all across Malaysia. The next factor is sustainability and ESG initiatives. So green sukuks or sustainable and responsible investment sukuks, and digital zakat and work platform. Global acceptance of Islamic investment as part of sustainable investment universe has created significant opportunities in Islamic finance. This is particularly so in driving the development of innovative funding instruments that support global demands for sustainability development projects. Sukuk as a funding investment has gained widespread appeal in Malaysia. Malaysia is one of the leading sukuk providers for the globe, and they have issued various sukuks for funding of their infrastructure projects, which include large-scale solar plants and infrastructure projects as well. Malaysia has also innovated in digitizing the fund collection of zakat and waqf. So this helps in poverty elimination, eradication, and moving towards a sustainable financial model. One of the major steps Malaysia has taken is the international collaboration and standard development across the world in Islamic financial. Malaysia has been a key player in promoting international collaboration and establishing of standards in Islamic finance. The main highlights are global leadership and influence, regulatory and standard setting bodies, which includes Bank Negara, Security Commission Exchange of Malaysia, Islamic Financial Services Board, and they also collaborate closely with IOFI, the Accounting and Auditing Organization for Islamic Financial Institutions. Besides that, in terms of Sharia governance and compliance, they have developed Sharia Advisory Council and internal Sharia committees. One of the key players in the development of any product or any services are the human resources. So Malaysia has taken keen focus in developing the human capital as well. They have developed institutions such as INSEEV, ISRA, IBFIM, which are leaders in Islamic finance. They have been fostering and creating workforce for the banking and financial industry within Malaysia, and they've been providing support all across the globe as well. INSEEV was established by Bank Negara in 2005 with the aim of developing human capital and knowledge for global Islamic finance industry. Their main objectives are providing research capabilities with world-class education and training in Islamic finance to the global audience. They provide academic programs such as PhD in Islamic finance, Master in Islamic finance practices, Master in Islamic finance, and Chartered Islamic finance professional certifications. They also delve in research and development. Most of the product development and research has been conducted by INSEEV, which has helped the Malaysian banking sector to be one of the prominent and leading Islamic financial hubs within the globe. They also have a very strong industry engagement. INSEEV is also globally recognized for its contribution in Islamic finance, education, and research. Besides having their own institutions, they also work closely with other institutions such as IOFI and other global academic institutions to collaborate in research within the Islamic financial spectrum. So these were a few points. Let me get back and show you a brief picture. So these were the key driving factors within the Islamic banking revolution, which caused the Islamic banking revolution, which has sprung over 4 decades in the Malaysian Islamic banking side. So they have developed key initiatives and which has brought them as a prominent figure among Islamic banking, Islamic countries. So let's move on to the challenges and see what are the current challenges and opportunities within the Malaysian Islamic banking sector. So with progress, there also comes challenges. One of the major challenges which has arisen is harmonization of standards, of Sharia standards across the globe. Different interception of Sharia principles across jurisdiction can complicate international operations and collaborations. So again, countries have their own Sharia boards, and they may differ. So bringing them onto a common platform is one of the key objectives and harmonization. That is the reason why Malaysia has pioneered in standardization. And on the other side, the regulatory burden adhering to both Islamic and conventional regulatory requirements, which have increased over the years and have become complex and costly for financial institutions. And with respect to the Sharia regulatory framework, it has become quite expensive for the financial institutions. So they have to have large teams to manage the compliance and standards. The other challenges include market awareness and education. So customer awareness is one of the areas which still requires a lot of improvement. Despite growth, some segments of population still lack awareness and understanding of Islamic banking products and their benefits. So awareness campaigns have to be conducted, and Malaysia is making good headways in this direction. Besides that, financial literacy is also a challenge. There is a need to enhance financial literacy related Islamic finance to ensure consumer can make informed decisions. So they understand how to take financial steps with respect to Islamic finance. So this requires financial literacy within the masses. Product development and innovation is also one of the challenges, because every business, every customer brings in their own requirements and challenges. So the product differ from user to user. Islamic banking products often mimic conventional products, leading to lack of distinctiveness. Innovative product development that clearly differentiates Islamic products is essential. So they should have clear distinction from conventional products. Risk management, developing a risk management framework that aligns with Sharia principles while remaining competitive with conventional banking practices is also a challenge. So again, they have to balance the risk and then be competitive with the conventional banking models. As mentioned above, talents and expertise is an area which requires focus all across the globe, especially in terms of Islamic banking and finance. As mentioned, Al-Sadiq Institute is also doing a wonderful job. There are various other institutions within Pakistan and across the globe. But again, this further requires enhancement. Skilled workforce there's a continuous need for professionals who are well versed with both Islamic finance principles and conventional banking. That will enable them to differentiate between these products and create Sharia compliant products. Training and development activities are also very necessary. And as you have seen, Malaysia has taken a leap forward by developing various institutions. However, globally and within Malaysia as well, there is further quite a bit of room in terms of training and development. As far as technological integrations are concerned, again, this is an area which is gradually creeping up and taking the role of conventional banks. And they have changed the way in which banking is done across the globe. And the case is same for Islamic banks as well. So technology adoption is one of the major challenge, because while moving on to technology, there are a lot of risk associated for it. For example, cybersecurity. Ensuring robust cybersecurity measures to protect customer data and financial transactions is a critical concern these days. Therefore, balancing between in-person and online transaction has become a challenge. Most of the transactions have moved online, and I'll later on show you about the current status within Malaysia, where they have led with the digital terms. One other challenge which Malaysia faces is global competition. Malaysia has led the Islamic banking spectrum for quite a few decades, but there are other global international players who are quickly growing in markets like Dubai, London, and Bahrain. So these are becoming financial hubs. Even Pakistan, the growth of Islamic finance within Pakistan is also at a very rapid pace, and it is achieving its targets. And the most important is standardization. Achieving global standardization while maintaining local compliance is quite a challenging act, because as I mentioned, jurisdictions, from jurisdiction to jurisdiction, these Islamic interpretations differ. So standardization is an area where Malaysia has taken major steps for the local industry, and they are now spreading their knowledge and their standards all across the globe. As far as opportunities are concerned, we have seen that almost 45% of the Malaysian market has been using Islamic financial products. Again, they have a target of achieving 50% conversion by 2030. And again, 50% marks just the halfway. So there still quite a few room for growth and expansion within the financial markets. As far as untapped markets are concerned, there are opportunities to extend Islamic banking services to the unbanked population within Malaysia and across the region. I'll share with you a few statistics with respect to financial inclusion as well within my presentation. Global reach, leveraging on Malaysia's reputation in Islamic finance to attract international clients and investments. There's quite a few opportunities. And Malaysia, being an hub for Islamic finance, has attracted a lot of investment, Islamic financial investment towards them. Again, there are quite a few opportunities further going down the road. As far as increasing the digital platform or the digital services, that is also an opportunity, keeping a balance with the technology challenges such as cybersecurity and other aspects of it. As far as strategical partnerships and collaborations are concerned, Malaysia is taking quite a head start over there as well. They're forming cross-border collaborations, forming strategic alliance with international financial institutions to enhance product offerings and reach. And industry partnerships, collaborating with fintech companies to develop cutting-edge financial solutions tailoring to the Islamic financial needs of the local and the global audience within Islamic finance. Although academic leadership has been one of the key factors of the Malaysian banking industry, however, their collaboration internationally and their reach is also one of the factors which has quite a few opportunities for the other Islamic countries and jurisdictions to adopt to their programs. So while there are significant challenges facing the Islamic banking sector in Malaysia, there are sustainable opportunities for growth and innovation. Addressing the challenges through strategic initiatives and leveraging opportunities can further solidify Malaysia's position as a leading hub for Islamic finance globally. And other countries can adopt the roadmap, the footsteps, and move towards the same progress and innovation financially Malaysia has observed over the years. Now let's look at some of the Islamic fintech in Malaysia. So what are the reasons for the development of Islamic fintechs in Malaysia? The first and foremost important is regulatory support. Bank Negara has been very vocal and progressive in developing digital banking framework, which are based on Sharia principles. And they have created various sandboxes for testing of their services. As far as market demands are concerned, this is also a major factor for growth of Islamic fintech in Malaysia. Over 65% population of Malaysia comprises of Muslims, and their needs for Islamic finance is henceforth catered through these financial innovations which Malaysia has experienced. Furthermore, technological advancement has also played a key role, such as blockchain, artificial intelligence, mobile platforms have created innovative Islamic fintech solutions for the customers within Malaysia. The major areas of innovation as far as fintechs are concerned in Malaysia are digital banking. As mentioned earlier, Bank Negara has developed a very profound digital banking framework, which the Islamic banking institutions as well as fintechs are leveraging to launch various services and increase their market share. Going on further, crowdfunding and peer-to-peer lending, where no institutions are involved, is also an area which is catching up globally, and the same is within Malaysia as well. Smart contracts and blockchain services are also an area of innovation which Malaysian market is experiencing. As far as other areas is concerned, as I mentioned earlier, digitizing of zakat, where it becomes easier for people with digital knowledge to pay in terms of zakat or waqf. And then takaful, which is Islamic finance insurance, is an area which is also have been focused within the fintech industry in Malaysia. As far as takafuls are concerned, companies like Takaful Malaysia offers digital platform for purchasing and managing takaful products, providing customers with convenient access to Sharia compliance insurance. As far as the digital landscape of Malaysia is concerned, the digital financial services is concerned, 79% of Malaysian adults use digital payment, of which 42 did so for the first time after the pandemic. So pandemic has played a major role in the move towards digital payments and digital transactions. However, this was not a new criteria within the market, within the Malaysian financial market. 49% of Malaysian adults save at financial institutions through mobile money accounts. So mobile accounts have also played a key role, and it is very popular within the Malaysian market. And the final stats, as 36% of Malaysian adults paid utility bills directly from their account. So again, financial transactions are being done digitally, which enables them to decrease load on cash transactions and bringing the transactions onto the net. And these statistics are with respect from a World Bank Global Financial Index Report 2021. Malaysia has also introduced a financial inclusion roadmap 2023-2026. This is the 4-year roadmap for the masses, and the outcome of this financial inclusion plan is access to affordable and sustainable financial products and services, responsible usage of financial products and services, creating awareness within this area, financial innovation that delivers value for all, and financially capable consumers with good financial health. As far as financial inclusion indicators are concerned, adults with deposit accounts comprise of 39% population, and adults with financing accounts comprise of 61%. Adult with life insurance or takaful policies are around 57%. So this has been done over the years. The financial literacy, the innovative products, and the support of the regulatory system has brought the capacity to 93% of adults having accounts. So financial inclusion, and further they have a roadmap to increase that to 100%, and then move on to financial literacy and sustainable financing. So this was a brief about the Malaysian financial sector. I've tried to keep it within the timeline. I would like to thank all the audience for being here, and I am open to questions if you have any.
Thank you, Faisal Saab, for such an enlightening presentation. And we have a question from Mr. Tokiruddin. I'll share his question with you. Why Sharia compliant products are unable to address the financing needs of the underprivileged segment of society, even though riba-free financing was initially started to protect poor against the exploitation in the hands of greedy money lenders. Sir.
Thank you, Mr. Tokir, for sharing your question. And as far as things are concerned, Sharia compliance products do have the capacity, but they require innovation and they require development of products for various sectors. Again, the development activities have to be there, and the role of research and development institutions will be a major step towards these initiatives. Islamic financial instruments and Islamic financial policies are towards creating a financially sustainable and poverty eradication. Initiatives like Zakat and Waqf are supposed to help the underprivileged sector. However, managing them in the right direction as per the Sharia guidelines and innovating products would lead towards that goal. As far as research is concerned, I think there is quite a few bodies working in this area. And the only challenge is banks have to adopt those, or financial institutions have to adopt those. And the role of the regulatory body is quite important. They have to balance between the risk and enforce such policies which could balance between sustainability and financial health of the institutions and providing services to the underprivileged population of the industry. So it's not about it has failed towards Islamic or Sharia compliant products have failed towards addressing that issue. The adoption has failed, in the enforcement has failed. So I think there's quite a few studs which are required in this area.
Okay, sir, thank you. Thank you for your response. Sir, I have two questions with you.
Yes, please.
How is blockchain technology being used in Malaysia's Islamic banking sector to ensure transparency and efficiency? Do I repeat, sir?
No, it's fine. So blockchains, blockchain industry is all about managing transactions of financial in a way where they can be secure. It ensures transparency and security of transactions, may it be financial or may it be any other transactions. In terms of financial industry, they are aligning with the principles of trust and honesty in Islamic finance. So one area is that they are helping in aligning the security of the financial transactions. The other area is automate and enforcing of terms of Sharia compliant contracts, such as Mdaba and Ijara all across the board. So these are the two areas where blockchains are working within the financial Islamic sector.
Okay, sir, thank you. And my next question is, how does Malaysia, aim to achieve the target of 50% parity between Islamic and conventional, as you have mentioned, conventional banking sector by 2030?
So the initiatives which Bank Negara has taken are quite steady. As I had shown you in my presentation, that the annual growth of Islamic financing is 7.7%.
Yes.
And conventional banking is growing, or conventional financing is growing at 3.4%. So if we take this trajectory down the road, it is quite achievable that they could reach up to 50% by 2030. So these projections are based on these learning graphs. But besides that, all of the initiatives that the Malaysian financial sector, Bank Negara and the government of Malaysia has been taking is moving towards that direction, as far as facilitating the role of Bank Negara for the banks, for the capital markets, for money markets. Developing the ecosystem has automated the growth of Islamic finance in Malaysia. So the ecosystem is present. So there are institutions which complete the ecosystem. And as far as skill sets are concerned, Malaysia has one of the profound Islamic finance institutions, as I mentioned, in SEEF, and other institutions which work along with Bank Negara to provide product innovation and research in Islamic finance. So all in all, these initiatives are driving the Malaysian Islamic market towards their target of achieving 50% market share by 2030.
Thank you, sir. Last but not the least, what lessons can global markets learn from Malaysia's approach to Islamic banking and finance? Am I audible?
Yes, you're audible. Yes. So Malaysian Islamic banking revolution was based on the factors where with government support, innovation within the Sharia compliance, technological integration, international collaborations, and learning and development initiatives. So all of these have played a major role. The other countries are also moving in this direction. All the countries have similar sort of infrastructure. But again, collaborating and working together in a single form towards achieving the goal has led Malaysia to become the leader in Islamic finance. So as far as such initiatives in Bahrain is concerned, or Egypt, the early innovators of Islamic finance, or even in Pakistan and Saudi Arabia, Iran, all of these frameworks are available. But their integration within each other would provide a faster movement. Malaysia has conquered the Islamic banking revolution by integrating all of these efforts together. So once all of the efforts are integrated together, the movement towards the goal becomes quite easy. And this is what is the major outstanding factor in Malaysia's Islamic banking revolution. As far as other countries are concerned, they are also moving in the same direction. They have similar institutions, but the integration requires further collaboration. The more they collaborate with each other, the more they integrate with each other, the faster they're going to move towards their goals. So in my view, integration, Malaysia has cracked the code for integrating all of these bodies together. And with that, they have conquered the Islamic banking revolution across the globe. And they are the leaders in Islamic banking and a major hub for investment, development, and innovation within the Islamic banking sector.
No doubt about it, sir. Thank you, sir. Now, I would appreciate if our host can unmute Mr. Riaz Nazar Ali Chunara. He is head of NIBAF. Abbas, Mohsen, anybody can help me in this?
Assalamu alaikum. I have asked him to unmute his mic. I cannot unmute him. He can himself do this.
Okay.
Yes, Assalamualaikum.
Assalamualaikum, sir.
I think it was very useful session. Information about how Malaysia has actually transformed, and I think it's good to learn that Malaysia is way ahead in a lot of areas, and Pakistan should learn a lot from them. Especially, I understand that the capacity building institutions were the key as well.
Thank you, sir. Thank you for your presence. We are really honored that we have with us, and your valuable comments and suggestions have always been very instrumental. Now, I would like to thank you, Mr. Faisal Hussain, for this enlightening presentation. Your insights into this, banking, your insight into Malaysia's Islamic banking revolution and its global implications have been truly inspiring. We appreciate your sharing your experience and expertise with us today. I would also like to thank all our participants, especially Riaz Nazar Ali Chunara and participants from abroad, for joining us and having your wonderful time and allocating your time to attend this webinar and for your engagement. We hope you have found this session informative and that it provided you with valuable takeaways for your own professional endeavors. If you have any further questions or would like to continue the discussion, please feel free to reach out to us. Once again, thank you, Mr. Faisal Hussain, and thank you all of you for being a part of this webinar. Have a great day. Goodbye and take care. Allah Hafiz. Thank you.